Hey everyone, welcome to the Mindset to Invest podcast. I'm Sarah, and today I'm joined by someone who's got lots of investing experience. Tom. Tom, thanks so much for being here. Today we're diving into why people should invest in the S&P 500, especially if they're just starting out. But before we get into that, Tom, for those who might not be familiar, can you break down what the S&P 500 actually is?
It's great to be here, Sarah. Looking forward to talking about the S&P 500, one of my favorite topics. I think a lot of people underestimate just how powerful this index can be when you stick with it long term. Speaking of growth, let's talk about why it's such a solid investment. As someone who follows Warren Buffett's approach, it's all about long-term investing. Buffett's philosophy is simple but effective. Buy great businesses and hold them for the long run. The S&P 500 is essentially a collection of some of the best businesses in the world. Over the long term, it's been one of the best ways to grow wealth, with average annual returns of about 7 to 10%, adjusted for inflation.
That sounds amazing. But I'm sure a lot of people are wondering, especially if they're new to investing, how do you even get started with the S&P 500? Is it really that simple?
You'd be surprised. It really can be that simple. The easiest way to invest in the S&P 500 is through index funds or ETFs that track the index. These funds are set up to mirror the performance of the S&P 500, and you can buy them just like a regular stock. There's very little complexity to it.
That's awesome! So you don't have to pick individual stocks, just buy into the entire index, and boom, you're investing in the top 500 companies. But as a beginner, what should I be aware of when making this kind of investment?
The key thing to remember is that this is a long-term play. While the S&P 500 has done well historically, the stock market can be volatile in the short term. If you're investing for something like retirement, it's important to stay the course even when the market has a downturn. Don't get discouraged by the inevitable bumps along the way.
I hear you. It's tempting to sell when the market drops, but that's definitely not the best move. For someone like me, who's just starting out, I've heard a lot about how low-cost index funds are. Can you explain that?
Yes, that's one of the best things about the S&P 500. Index funds and ETFs that track the S&P 500 usually have very low management fees. Since they're passive investments, they're not actively managed by a fund manager. They're much cheaper compared to actively managed funds. That's a huge advantage, especially if you're a beginner and don't want to get hit with high fees. That's huge. Less cost, more growth potential. I love that.
So Tom, what about for someone like me? I'm thinking more about the long-term horizon, let's say 20 or 30 years down the road. How does the S&P 500 fit into that?
That's exactly where the S&P 500 shines. The beauty of investing in the S&P 500 is that the longer you hold, the more potential for growth. If you're investing for 20 or 30 years, you're likely going to see your investments grow significantly, especially when you reinvest your dividends. Time is one of the biggest factors when it comes to building wealth.
And that's where the power of compound interest comes in, right?
Exactly. Warren Buffett himself has said that his greatest wealth-building tool is time. When you give your investments enough time to compound, it can lead to some incredible results. The S&P 500 has delivered solid returns over the long run, and it's one of the simplest and most reliable ways to build wealth over time.
I love that. I feel like the biggest takeaway here is that patience and consistency are key. Don't get caught up in the short-term noise. So, for someone new to investing like me who might be intimidated by the stock market, what would you say is the best first step?
First and foremost, start small. You don't need a lot of money to get started. Many brokers allow you to open an account with a low minimum deposit, and you can even start with as little as $50 or $100. The key is to just get started, even if it's a small amount, and then make regular contributions over time. Stay consistent and let the power of compounding do its work.
That's great advice. So, even if I'm just investing a little bit each month, over time that can really add up. I like that.
Exactly. It's all about building the habit and letting time work in your favor. You don't need to be a genius to do this, Sarah. Just be disciplined and stick to your plan.
I love it. I think you've really simplified the process for our listeners. Tom, thank you so much for being here and sharing your wisdom. I know everyone's going to walk away with a better understanding of why the S&P 500 is such a great investment.
It's been a pleasure, Sarah. I hope everyone listening takes action and starts investing in their future. You've got nothing to lose and a lot to gain.
Absolutely. And to everyone listening, thank you for tuning in. If you found this episode helpful, make sure to subscribe and leave a review. Don't forget to share it with a friend who could benefit from this info. We'll catch you next time on Mindset 2 Invest.